Have you heard about the recent announcement of a 3-for-1 stock split by Tesla? Lots of people probably weren't expecting this given the recent decline. Keep watching to find out the details of this 3-for-1 deal. The fact that several market equities have been in a downward spiral trend is now common knowledge. Not just Tesla, but also other major tech companies such as Google and Apple. The stock market has been experiencing a precipitous decline recently. In spite of this downturn, these companies are still doing very well, and they see it as just another random event that happened because of all the unexpected things that happened throughout the world and had an impact on the economy. Adam Jonas, a famous Tesla bull at Morgan Stanley, breaks about the 3-for-1 stock split for Tesla in today's video. So far, Tesla has been coming out on top in the electric vehicle industry's current race. In his analogy, he claimed that the electric vehicle business is like a marathon, with Tesla at the 21st mile and the other companies still in the early stages, such as those still tying their shoes. Using metaphors, he backed up his assertion by saying that Tesla's strong position is being reinforced by recent records of car deliveries, which are getting stronger as the marathon continues. Any announcement involving Tesla, even a stock split of 3-for-1, is bound to generate excitement. Can you explain a stock split? Forbes states that a stock split occurs when the board of directors of a company gives existing shareholders new shares of stock without reducing the value of their investments. The value of a share drops as its number of outstanding shares rises due to a stock split. Although little investors may assume they can purchase the company through a cosmetic stock split, their numbers pale in comparison to those of large institutions. Small investors can now purchase a piece of what appear to be pricey stocks through fractional trading, which is already offered by many brokerages. The value of a corporation is unaffected by stock splits. If a company's stock is trading at $100 per share and the stock splits in half, for instance, investors will end up with two equities, each worth $50 instead of one. Their original one share is now worth twice as much as their two new shares. Reuters cites Bank of America research as saying that companies that divide their shares of stock typically do better than the market. One possible explanation is that following a stock split, investors may purchase additional shares in the company at a lower price. Companies that have seen their stock values skyrocket, say, to hundreds or thousands of dollars per share, may decide to split their shares in order to bring them back down to a more reasonable level for individual investors. Elon Musk's $44 billion bid for Twitter and the COVID-19 related Shanghai shutdown, which halted production at a Tesla plant, are two of the many economic factors that have contributed to the precipitous decline in Tesla's share price this year. Due to Musk's use of his stake in the electric vehicle firm to fund the social network acquisition, this contentious revelation has placed pressure on Tesla stock. In a 14-day filing with the SEC, Tesla recently detailed its intentions for the 2022 annual stockholders meeting, which is scheduled for August 4th and included a number of agenda topics. On the day of the stock split, Tesla plans to divide its common stock by 1/3 and treble the number of shares accessible, according to its stated aim. The fair market value of the business is unaffected by this change. Basically, it's just a way for a publicly traded firm to make more common shares accessible to investors at a lower price. In a recent announcement, Tesla's board of directors stated their intention to split the company's common stock 3 ways. Therefore, if you possess 1 share in Tesla, you will essentially receive 2. This change, they say, will open up more opportunities for employees and investors to purchase Tesla stock. The fact that this is being done in part to make its stock more available to individual investors is really praiseworthy. Following a 42% decline in value for the company's shares this year, the aforementioned notification was made. After hours, Tesla shares, which had closed at $696.69 on the announcement day, were up over 1%. We want to make sure that all of our employees, regardless of when they join, have access to the same advantage, even though this value appreciation has already benefited our staff greatly over the years. The filing stated that Tejas, the principal objective of the authorized shares amendment, according to Tesla's statement in the aforementioned filing, is to enable a stock dividend consisting of a 3-for-1 split of our common stock. Shares were divided. They went on to state that the stock split couldn't be implemented since there are 1,036,390,569 outstanding shares of common stock as of June 6, 2022, but there are 2 billion authorized shares of common stock. Subject to and pending stockholder approval of the authorized shares amendment, our board plans to adopt the stock split. Is the 3-for-1 stock split something you can get behind? Please share your thoughts with us by posting a comment below. An extraordinary dividend would be distributed to investors in order to implement the 3-for-1 stock split, according to Tesla. You may remember that Tesla announced in March that it will be requesting approval to divide its shares at its annual meeting. The details of the split are now being revealed by the corporation. A proposed stock split was detailed in the filing by the corporation. The key to our success is attracting and maintaining top personnel. One way Tesla was able to achieve this was through its very competitive compensation packages, which gave every employee the option to obtain ownership. We anticipate that the stock split will allow our common stock price to be reset in the market, giving our employees greater leeway in how they handle their equity. If everything goes according to plan, this will be the second stock split for the business in under 2 years. Keep in mind that Tesla announced a 5-to-1 stock split on August 11, 2020, and it went live on August 31, 2020. Before the split, a share was worth $2,213.40. After the split, it was trading at $442.68. Later on, at the time, a share of Tesla stock was selling for about $1,300. However, after the announcement of the stock split, the price of the stock skyrocketed to a new all-time high of $2,000 per share. As a result of the split, the price per share was reset to around $460, and the company was valued at around $430 billion. Included in Tesla's planned agenda for the shareholders' meeting is an increase of 4 billion authorized shares of common stock, the company said. The company said that it has the legal right to issue 2.1 billion shares, including 2 billion shares of common stock and 100 million shares of preferred stock. Each share has a par value of 1/1000 of a dollar, an increase from 2 billion to 6 billion authorized shares of common stock of Tesla was made possible by the authorized shares amendment. The overall amount of allowed preferred stock shares would remain unchanged under the authorized shares adjustment. According to Tesla's 2022 proxy filing, the company is asking its stockholders to approve an amended certificate that would increase the number of authorized common stock shares by 4 billion. In addition, the renewable energy and electric vehicle company said that Larry Ellison, a board member, presently holds 1.5% of Tesla shares. Ellison intends to step down from his position as a director at Tesla. Elon Musk, CEO of Tesla, presently owns 23.5% of the company's shares, according to the filing, while Vanguard owns 6%. Musk divested himself of a large portion of his Tesla shares towards the end of 2021, partly to strengthen his position in the social media behemoth Twitter. Over $44 billion was the price he settled on today. With a market valuation of $720 billion, Tesla is a company whose stock is traded at approximately $700 per share. According to Electric, if the stock price remains same until the stock split takes effect, one share of Tesla would be worth about $233. In the United States, Electric is a news outlet that focuses on renewable energy and electric vehicles. Electric has a stellar reputation for consistently publishing good stories on electric vehicles and Tesla in particular. Reportedly, Tesla would also put the matter to a vote among its shareholders to shorten the terms of its board of directors from 3 to 2 years. We propose to spread the terms across 2 years if granted. Share splits at Alphabet, Apple, and Amazon.com are all too familiar to investors and financial aficionados. Even while a split won't change the fundamentals of the business, it could increase the number of investors who own shares, which could boost the price. For additional content about Tesla stock, check out our channel and view our other videos.